Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep up with the analysis of the euro currency. So the suggestion that we have made in the weekend in general was correct. So we have talked about the intraday point. It's around 117.90. It was important for intraday performance, and we said if market will not able to break it up, it means that it will show deeper retracement. So actually currently we have this deeper retracement. The only thing that might be a bit upsetting that with this downside action, the downside candle, we haven't got the bullish grabber. So daily trend just has turned bearish. So our result right now stands around 1637 on the daily chart. And at this point, we do not have the clear confirmation that retracement is over, that market is ready for upward continuation, except a couple of moments. They are not direct signs that it should happen right now, but they have some logic. First is the standing of these major targets. Market stands very close to them. Usually, I'm talking about this many times already, but usually when the target stands close to the market, it almost never shows deep retracements. So difficult to see this type of the retracement when the market stands near the XOP or OP target. This type of the pullback, absolutely possible. So this is not really something really big. This first moment. And second is a pattern that I see right now on the hourly chart. But about this pattern a bit later. On the 4-hour time frame chart, you could see that our support area works just perfect. On weekend, we said this is the primary area where we start watching for possible taking the long position. If you have taken a long position here already, that's great. So you could move stops to the break even and see what will happen. The rest of the report mostly stands for those who do not have any positions right now. On the 4-hour time frame chart, the one tricky moment that we have to keep an eye on is a possible bearish grabber that might be formed here. Because it could destroy the pattern that I will show you on the hourly chart. If grabber will be formed, market's just taken out of these lows. And in this case, if you will see it, it's better to not take the long position on the hourly chart. If we will not get any grabber, that's great. So the pattern will have the chances to work. Here's actually the pattern on the hourly chart. You can see with this downside action in butterfly shape. Here you can see that minor hand shoulders is forming. Potentially, it might be the pattern that could start upward action. Nominally, in fact, by all rules, we should not take here long positions because we have bearish context on the daily. On the hourly chart, you could see that we have also 1618 extension of the same butterfly shape, 1671 that barely has not been tested. Just mostly because of the working of this confidence support. So some risks of the possible downward action, and yes, the grabber, this might be formed as well. So some risks with the possible downward action still exist. So it means that if you decide to deal with this pattern, it's better to not take too much risk. So it means that just place your stop somewhere below the potential bottom of the right arm. Hardly it will be below the 1710. So the risk of the 30 pips, 35 pips, it's normal for this type of action. But better to not use the stops below the confluence. It will be too much. So that's actually what we have currently on the euro currency, except maybe this head and shoulders. I do not see something to trade immediately. And probably performance of this pattern will show what to watch next. If we will see that it start working, market returning back in this trading range above this line, breaking it, it means that we're going right to our target, 1855, 1886, what we talked about in the weekend as well. If pattern will collapse and you will see that market start dropping further, especially if we will get the grabber on the 4-hour time frame chart, it means that at least market will retest these lows with the completing of the 1670 target of this butterfly. That will be minimum possible destination points. Or even more, we could get even deeper downside retracement. Because if you take a look at the cross-market analysis, yields are rising, dollar is rising, so showing some pullback. From that standpoint of view, chances exist that it might be extension. But at the same time, since this is, well, relatively clear pattern, if we intend to trade it, it carries reasonable risk. So I would say that it's a really big risk here. I also think that theoretically it might be taken. Why not? So besides currently on euro currency, we have nothing else. So that's probably all for now. Let's see for the progress.